A man walks along the streets on the Lower East Side of Manhattan, heading toward the intersection of Broad Street and Wall Street. Holding his hand and keeping pace is his 9-year-old grandson. Young Daniel Frischberg is about to get a first-hand look at the New York Stock Exchange. He doesn't realize it yet, but his destiny is to be a major player in the world of finance. What he's learned over nearly 50 years, he'll teach you today, and it's all free of charge. There's a billionaire locked inside you. The key to freedom is information, the kind of information you find here on the MoneyMan Report. Now, here's the MoneyMan. Here's Dan Frischberg.
Good morning, everybody, and thank you for joining me. So this is, I'm getting a lot of the same questions from lots of different places from the members of this group. And so this is an interesting day because we're probably near the end of the pullback. And so I want to, the questions people have is how do you create these? How do you create the oscillator? How do you find out the values? How do you do these things? They're all things that I've shown before, but I think I'm going to go through the process of figuring out what to do, because I think we are a few days or a week or something, I can't tell you the exact time, but we are short of the time when it's ideal to take action. Now, we're not day traders and we're not interested in buying and selling and buying and selling. But if you have things that you want to do, what's happening to a lot of people is that you're buying an option, the stock goes up. Now the option is in the money, and you know that you don't really want to own an option that's in the money because you don't have enough leverage when you do that. The option has been run up and become too expensive because now it's in the domain where everybody wants to buy it. They like to buy roughly in the money options or even deep in the money options. So you want to sell that and buy one with a lower delta that's going to have more leverage and be work better. The time to do that is when the stock market is in the relatively short run overbought. And then the time to buy something that you have in mind to buy, whether it's something that you're rolling forward or that it's you want to buy something with a lower delta, or you bought an option that didn't go out far enough because that's all there was at that time, or time has elapsed and now you want to move it out because we're taking positions that are 2, 3, 4, 5 years. And that makes perfect sense to do right now because we don't know exactly when the world is going to enter this accelerating recovery after COVID, but we know it's going to be in a matter of months and not years. But it could be April, May, June. When is the stock market when is the world going to suddenly psychologically wake up in the morning and be past COVID and be on to the regrowth? Personally, that's where I am already. And a lot of people are, but it's going to happen at an accelerating pace, and it's going to show up in stock prices sooner or later. So I want to show you the processes. A lot of people want to know, where are we? Because I sometimes say that today's a good time, and sometimes I'm saying today's a good time to sell whatever you want to sell, and sometimes I'm saying today's not a good time to do anything. So on February 1st, I showed you that it was probably, if you wanted to buy companies that are going to benefit from the global recovery and companies that are going to benefit from the transformation of the world digitally, that was a perfect time to do it on February 1st. And then a week or two later, it had happened. It all worked great. Everybody made a ton of money. And then some of the things that we bought were now in the money, or for one reason or another needed to be, some action needed to be taken. And it wasn't a good time to be buying in. We had good ideas, but and we wanted to do it right away. And it's hard to sit and watch something go up without you, but it wasn't really an ideal time. When we know that these mood swings are happening virtually every month, and now really going from top to the bottom every few weeks, it pays. It's a really good reason to be very patient. And they used to say when I was in New York, and when I used to go do a lot of TV, there was a saying on the New York Stock Exchange that it is the tool for the transfer of money from the impatient to the patient. And so that's really, when you're using these options to generate additional leverage, and they're very, very profitable, that's a time when it takes even more patience. It feels like it goes fast, but it actually requires patience. So I'm going to demonstrate for you how I get to a certain amount of these things, because I'm getting the same questions every day from different people. This is an actual account. What I'm going to show you now is an actual account that I created just for demonstration. And I put $27,000 into it in the beginning of August, around the first week of August. Subsequently, I took out all of that money, but I just want to show you, because people are saying that they're having various levels of success. I think it has to do with being reluctant to take action when you know you want to, and then later doing something that you wish you would have done before, but then wanting to make up for the omission by doing it again. There's a lot of different theories about why that's happening. I just want to give you a quick demonstration of what that account has looked like. It started, as I said, as $27,000, and I actually have taken the $27,000 out of it during that time, taking out fives and tens. So there really is it started basically with zero, but it started with 27,000 on August 1st. And I just want to show you you see that it does go down. And if you are worried about trying to have it always going up, you're going to be frustrated, and it makes you feel you're doing something wrong. In no case were we doing anything wrong. Now that I stopped it on February 8th at 94, it is now 112. But the bottom line is that if you aren't having that success doing exactly the things that we're talking about, because I'm demonstrating all of these companies and demonstrating all of these techniques. Everybody here has taken that 5-part course, knowing all the skills. So it really has to do with execution, with doing it, being willing to actually do it. It's fine to do it with a small amount of money, or even better, it would be fine if you don't feel comfortable. I don't want to induce anyone to take risk or to do things that you don't know how to do or that you're not comfortable with. But that's why each person has got a practice account. That was the first thing we did with each of you, is to create an account at Thinkorswim in which you don't have to do anything for money, but you can practice. And I know we're all grown-ups and we don't like to practice and we don't like to do it for play money, but that is how you get good at it. And I use that practice account all the time to see which trades I should do. But I just wanted to show you that what it looks like. And you can see that the account does sometimes fall. In this case, this fall here was the account was going down, but I actually took out $10,000 at that time to get my $27,000 back. But anyway, that I just wanted to show you that because if you're not having that success doing the techniques that we're talking about, it has to do with execution. And when you know you want to do something, then sitting around thinking about it, not doing it at the time that you wanted to do it, and then feeling bad that it worked, and then wanting to go back and undo missing it, and so doing it again at the time when it wasn't such a good deal. So that if that's what's happening, I want to go over with you some of the questions that people have. And I can tell you, I just want to tell you on the top of this. And that's all the time we have. We are going to be back right after this.
Each week in his live video market and economy update offered to his inner circle, Dan Frischberg delivers the in-depth, professional version of his famous Market X-ray report, live and interactive. Now that means you get to ask all the questions you want. And if you can't make the live meeting, you can watch the report on demand. Then email your questions in and Dan will email the answers back or include them in the next live report. Week in and week out, Dan brings you the ideas and specific stock picks from his friends, the people you see on TV and read about in the papers. You'll see what they're buying, how they're hedging, and when they're taking money off the table. At last, you'll get to see how the insiders negotiate the institutional macro bonds that billionaires on Wall Street rely on, the ones almost everyone else never even heard of. When you become an Inner Circle member, Dan will share with you his lifetime of experience and guide you to the best teachers, the best stock pickers, the best option strategists. And you'll be invited to exclusive working vacations in beautiful locations for the Inner Circle only, where you'll rub elbows with some of the most famous investors on Wall Street. So, how do you value the lifetime of skill and experience of a top investor on a mission to share it all with you and help you become one of the few winners? If you've been listening to Dan for a few years, he's likely already made you tons of money, or even more important, saved you from losing a fortune. Now, there are limits to the capacity of the online video sessions, but right now, for a limited time, Dan's offering you the position of charter subscriber, get this, for less than the price of a cup of coffee a day. For all the info or to subscribe, just simply click on themoneyman.com. themoneyman.com.
You're tuned in to the Money Man Report with your host, TV and radio money man, Dan Frischberg. For more information about everything we're talking about, go to themoneyman.com right now. That's themoneyman.com.
Welcome back. This is the Money Man Report. I'm Dan Frischberg. We are very near the point where we were on February 1. We're very near the point of having the stock market oversold, particularly the digital transformation companies. We're at the point where it's very near an entry point. And today it may be an entry point, but I have no idea. I don't have the ability to time it that perfectly. But what I'm going to do now is one of the first questions that I have, at least several people, 3 or 4 people, had the question of how do you do that? How do you generate that oscillator to see where we are? So normally today I would just show you the oscillator, but what I want to do here, and as you can see, here, let me make sure I'm showing. So this is what that looks like. This is the NASDAQ's advanced decline oscillator with a 10-day moving average, taking out the confusing daily moves up and down. and just looking at it, smoothing it out with a 10-day moving average so that you can make sense out of it. Now, the point here is that the companies that we're buying, their profits and their sales do not change every week or every month in response to little events that are happening. What you're seeing here about about people buying and being very eager to buy, they were the most eager to buy right here in the middle of February, which was exactly the wrong time to buy because they were bidding up the price of everything. They were very eager to sell on February 1st. We actually had a meeting here, this picked Dan's brain, at around February 1st, and identified this as a perfect place to do whatever buying you wanted to do. We also talked about that back in November. But what I want to point out is for sure, nothing changed about any of these companies' sales or profits or their prospects for the future during this time. They didn't have some horrible thing happen on February 1st and some wonderful thing happen in the middle of February, and now we're having bad things happen to them again. In fact, what's happening is that we are, for all of those companies that I'm interested in buying, which are about the regrowth of the world economy by urbanizing, buying electricity, and then using these digital transformation companies to make everybody communicate better and to make companies far more efficient, and everybody needs them and everybody is gradually buying them. Over the next 5 years, it isn't going to only be the United States and Europe, but it's going to be at least 3 or 4 billion other people. And a lot of it is happening right now in India. A lot of it's happening in Southeast Asia, and a lot of it happening in China right now. And this is going to happen, it may feel gradually, but the whole world is going to be transformed over the next 2, 3, 4, 5 years. And it is going to be a bonanza for us. And all of those things happening at the same time. Last time I saw anything like that, I was not even alive, but it was World War II. But I saw it again in the early mid-60s. And this is now the same thing as the recovery from World War II. Everything happening at the same time. At that time, all the boys came home, the productivity went up, they had enough people to do the work, they had enormous amounts of technology that they developed during the war to win World War II. Now they were putting it to work in the economy, first in the United States and then in Europe, and that was an amazing opportunity where a lot of people became very rich. We are having exactly the same thing now as the world recovers from COVID over the next 3 months, 6 months, 9 months, and as the world goes back to the digital transformation. Companies are much more economical to buy now. The economy is easier. The companies that are doing that digital transformation have a much easier time because they are digital. The products they make don't require manufacturing. They're in a world of very, very low interest rates if they wanted to borrow money, but they don't have to borrow very much because they can produce 1 million copies of their software. And I'm talking about Twilio, Microsoft, MasterCard, all of them have the same situation. They're digital platforms. The cost of them producing enough to spread around the world doesn't require very much investment on their part. All they have to do is research and development and a little bit of marketing. Companies like Twilio don't even have to do a lot of marketing because the companies that build on their platform, they do the marketing and they spread around. So I want to show you how we made this. Well, as you can see, we're getting very close to another good entry point here. And I don't know if today is the day or if it will rally a little bit or be comfortable and then come back down a little bit more. But we are going to, you see what happened back here in late February. It never really just hits that spot. It always may bounce around a little bit on that spot. So I can't really tell. But I do know that we're not at the top, that we're very close to a good entry point. If this is not the perfect entry point, it is close. So if there's things that you wanted to buy, this may be a good time to buy a little bit of it. And then when you're more certain that this is the area where you want to buy more. You don't have to know exactly what you're going to do. But many people have asked me to do this again. You're going to get a video of this. You don't have to be able to do it just because I show it to you now, but you're going to get a video of it, of this. And you're going to be able to stop the video and go in and duplicate everything that I do. And that's going to give you the ability to do this. If you just do it a few times, it will become easy for you. You'll have neural pathways in your brain and it won't feel a lot of friction. But it does take doing it a few times. And that's why I'm doing it now for you, so that you will have a video showing you exactly how to do it. You're going to stop the video and then go online and duplicate exactly what I'm doing. And you're going to know how to do it. And then you're going to get comfortable with it if you repeat it a couple of times. This is called stockcharts.com. And you can see where we are right there. It's just called stockcharts.com. It doesn't need anything after the slash. It's just stockcharts.com. Now, what I'm wanting to see is the relationship between advancing issues and declining issues. As people are starting to feel better and better about their position and wanting to buy, the number of advancing issues starts to increase and the number of declining issues starts to go down. And so this line that you're looking at here is the 10-day moving average of net advances versus decliners. Advances minus decliners, I guess, in this case. So as they're feeling better and better, they're buying more, they're selling fewer things. And as they, and really very few people are doing it at the bottom, and the prices are advantageous. And as they do it more and more, they start to catch on. I keep using the metaphor of lemmings because what they're doing is we're buying individual companies, or we're buying positions in individual companies. Those companies do not change every week or every month. And when we're buying them to have a position in them for 2, 3, 4, 5 years. And when we do that, we don't know exactly when the price of the stock is going to correlate with how much money it makes and how much the sales are. But we do know that it doesn't take very long, and sooner or later it's going to do that. So instead of watching the stock prices or the options prices, the options are going to go down if the stock price isn't going up, because the options have a time element and they're eroding. If the stock's moving sideways, the option price is going down. But the stock can be going up and down in the short run in meaningless ways that have to do with the mood of people rather than anything to do with the company. And I can tell you, I'm going to repeat something that I said the other day on the Inner Circle. I was on the Neil Cavuto show. They were talking about something that was happening because of the news. When it was my turn to talk, I said, this is not happening because of this news that we're reporting today. That's not what's happening. It's happening simply because the psychology of these people is changing. These stock prices are not changing because of any kind of an event. But Neil was reporting that the reason, for example, he's probably reporting today, or was reporting yesterday, that the reason the stocks were going down was because of something that the Fed chairman said to the Congress, or something he said, or Janet Yellen said something about what the Fed was going to do. And so they will explain the move based on that. But you see, that very same news can happen a couple of weeks earlier, and then it was great, and the stock went up. Now they're explaining that the stocks are going up because of what Janet Yellen said. And then today they're explaining that stocks are going down because of what Janet Yellen said. And essentially, nothing has changed about what her position is or what she's saying. Nothing has changed about what the Fed chairman is going to do. Nothing. In fact, they're going out of their way to be consistent, even when they aren't consistent. And yet, you can see that the reaction of the stock prices in the very short run is positive one day and negative another day. So here we are, and as it's going up, more people are buying more stocks and selling fewer stocks, and that's what's going up here, because it's a formula of advancing issues minus declining issues. And that's all the time we have. We are going to be back right after this.
You've heard it said right here, with enough leverage, you can multiply your investing strength and move mountains. So think about it. How'd you like to own companies like Roku or MasterCard or Raytheon and put down as little as 5 or 10% to unlock the treasure chest of unlimited upside gains? You can, all the while drastically reducing your risk, and you can do it with zero borrowing costs. You just need that leverage and a little know-how. So Dan Frischberg is going to allow you to pick his brain to better understand the concept of leverage. These are special online training sessions called the Pick Dan's Brain Option Service. You can use just a little bit of money to potentially make incredible returns. If you want to make real money, you owe it to yourself to take advantage of this once-in-a-blue-moon opportunity. All you have to do to try it is to go online and register so you can see the results for yourself. The cost is next to nothing, and look what's waiting for you. Each week, Dan will discuss a few detailed trades, quality, actionable trades. You get detailed instructions on buying and selling specific put and call options. The Pick Dan's Brain Option Service shares specific underlying stocks, expiration dates, strike prices, and shows you how much money you could make instantly. It's Dan Frischberg's time-tested, proven money-making discipline that he's used for 50 years to make himself and a lot of other people rich. Lots of other benefits are waiting for you, too, if you just register at themoneyman.com. That's all one word, themoneyman.com, for the Pick Dan's Brain Option Service. This is about teaching you the knowledge and skills. It's your responsibility to apply these skills and knowledge to your specific situation. It's too much to detail here, but all the info is right there at themoneyman.com.
You're tuned in to the MoneyMan Report with your host, TV and radio money man, Dan Frischberg. For more information about everything we're talking about, go to themoneyman.com right now. That's themoneyman.com.
Welcome back. This is the MoneyMan Report. I'm Dan Frischberg. You can do the same thing with advancing volume minus declining volume. And it's worth it to look at both of them, actually, and get a feeling for that. Usually they correlate, but sometimes they don't. And when they don't, that's also interesting. But the way we do this is I'm going to put a dollar sign, and that tells this thing, I'm putting a dollar sign, that tells this thing that we're doing about an index, not about a particular company. And then I'm going to say this is the NASDAQ or the New York Stock Exchange, either one. I like to look at both of them. And then I'm going to type advances, space, decline. And that's going to give me the choices of here doing it with issues, the number of actual stocks going up or down, or the amount of volume going up or down. And I'd like to actually look at both of them, but I'm going to choose that. And that's going to go to this thing, which is the daily look of that, which tells me very little and is very difficult to work with. So what I'm going to do is fix this so that I can make sense out of it. First thing I'm going to do, where it says the range, instead of fill the chart, I'm going to say, give me a year. I might make it 2 years if I wanted a longer view. And then I don't really want these candlesticks. These are the daily prices and they're just confusing and they tell me nothing. So I'm going to tell it to make this candlestick invisible. So I selected invisible. The next thing I'm going to do is the overlay. Now that the daily thing is invisible, the only thing I'm going to see is the overlay, and that's going to be a 10-day moving average. Then I'm going to take the other one out. I want this to be as simple to look at as possible. So I'm going to take out all of these different indicators, which someday they may be valuable to you, but today we're not using it on this picture. And then all I'm going to do is say update. So here's the picture that we had. Those are the changes, and now it's going to update, and it's going to show you exactly the line that we were looking at. Now I can do the same thing with the New York Stock Exchange, and I should look at both of them, even though a lot of what we are buying are digital transformation companies that are usually in the NASDAQ, but the digital transformation companies are actually kind of having a life of their own because they're so much more profitable than other companies. There's also this girl, Kathy Wood, who has got a exchange traded fund, and suddenly she's become a rock star. So I used to be talking about what Motley Fool is doing and say, keep away from them. Now it's Kathy Wood. And now suddenly everybody wants to follow Kathy Wood. Actually, she's got a digital transformation internet company called ARKW. If you don't want to risk a lot of money at a time, and sometimes ARKW is actually a very good asset to buy or sell an option on. But you can see that we are at least close to a point now where everybody agrees that the stock market is terrible. Everybody agrees that these things should be sold. All of these people, I use the metaphor of a lemming. Lemmings are an animal. I actually had a little picture of it that I was going to show you, a picture of lemmings. But what they are, you probably know about them, but for those who don't, lemmings are an animal that live near the North Pole. They live in a place where there's very little food, and so they're a small animal. They're not really a good hunting animal. They're not a lion. They're a little animal like a squirrel. And so they need to keep the population. There's a lot of survival value in keeping the population of lemmings down up there in the North Pole. And every year, the leader of the lemmings leads a procession of lemmings. And it's the curiosity that people have been following forever. Who knows why they're doing it? But the leader of the lemmings leads a procession of them. They go to the same cliff overlooking the icy waters, and he goes off the cliff to his death, and then this whole group of lemmings follows him. And I always wondered as a kid in biology class in high school, what are they saying to themselves as they follow the leader off the cliff to their death? And this is basically what these are what these investors are doing. They're following each other, but they don't really know what they're investing in. They're relatively inert. They don't have the energy. They don't know how to do the research. Although, if anybody asked them who's leading the batting average last year in the American League in baseball, they all know how to find the answer in 30 seconds. But they don't give themselves permission to know how to do the research on the companies that they want to invest. So I don't mean to insult them, but I'm calling them lemmings because they're simply taking action following each other, and it's usually wrong. So here they are where they all agree that it's terrible and that it should be bought, and they've all been selling more stocks and buying fewer stocks. And so the advance minus decline has gotten to very close to an extreme. Now they're all sold. There's nobody left to sell. They all agree it should be sold, but there's nobody left to sell. They run out of sellers. In some cases, we get a cathartic selling episode where this is when it's really easy, when they all start to sell at the same time. They panic, and there's a very high volume day where 90% of the volume is down, 90% of the issues are down. And that's where they've all sold out. You've gotten rid of all of the weak hands who could be selling because everybody else sells. Eventually, you run out of those weak-handed investors. Now everybody agrees it should be sold, but there's nobody left to sell it. And so one buyer will start to move it up. And of course, as it starts to move up, as it did on February 1st, February 5th, it starts to move up. It may not be exactly the right day, but now more and more people are being converted. And so more stocks are advancing and fewer stocks are declining. We're very near that turning point right now. I don't think it matters whether we're exactly at it or near it, but you're definitely, this oscillator is not at the top. Nothing has changed about the Fed. Nothing has changed about the Treasury Secretary, and nothing has changed about the profits of Twilio or the profits of the future anticipated profits of Freeport-McMoRan. Nothing has changed since last week about any of those things. So this is how you actually do it. And what it looks like to me is that we are very near an entry point. And if you're and I'm buying a little bit of the things that I want to buy because I'm not sure we're exactly at that entry point, but I don't have to be exactly perfect about it. So this is the NASDAQ's advanced decline line. Quickly, I'll do the same thing again. New York Stock Exchange, space, advance, decline, by issues. Sometimes it's helpful to look at by the advancing and declining volume, especially on the NASDAQ. So here it is. I'm going to say 1 year, one more time. I'm going to make the candlesticks invisible because I don't want to see the daily thing. It's confusing. I'm going to change this to a 10-day moving average. By the way, sometimes it's worth it to look at the 30-day moving average as well, but I'm going to get rid of the other stuff just to make it simple. Many of these things are things that you might want to study up on and use them for different things. But for now, we're just doing this. And now I'm going to update it, and it's going to create that same oscillator, but this time it's for the New York Stock Exchange. You can see that it hasn't gotten as extreme as it did in February 1st, but it is definitely not at the top, and it's definitely near a good entry point, and maybe the ideal entry point. I just can't tell right now. But that's how you do it. The next thing is, let's look at Kathy Wood's ARKW fund, because that has got a lot of the things that I'm interested in buying, but it's becoming more and more, it used to be a very attractive one, and I used to use it. But now that she's becoming such a icon, and that she's getting so much press and people are following her so much, they're driving up the price of the options on her ETFs, and it may not be good anymore. It's getting close to being not that good of a deal. So the next thing people wanted to know was, how do you see these things? And that's all the time we have. We are going to be back right after this.
Each week in his live video market and economy update offered to his inner circle, Dan Frischberg delivers the in-depth, professional version of his famous Market X-ray report, live and interactive. Now that means you get to ask all the questions you want. And if you can't make the live meeting, you can watch the report on demand. Then email your questions in and Dan will email the answers back or include them in the next live report. Week in and week out, Dan brings you the ideas and specific stock picks from his friends, the people you see on TV and read about in the papers. You'll see what they're buying, how they're hedging, and when they're taking money off the table. At last, you'll get to see how the insiders negotiate the institutional macro bonds that billionaires on Wall Street rely on, the ones almost everyone else never even heard of. When you become an Inner Circle member, Dan will share with you his lifetime of experience and guide you to the best teachers, the best stock pickers, the best option strategists. And you'll be invited to exclusive working vacations in beautiful locations for the Inner Circle only, where you'll rub elbows with some of the most famous investors on Wall Street. So, how do you value the lifetime of skill and experience of a top investor on a mission to share it all with you and help you become one of the few winners? If you've been listening to Dan for a few years, he's likely already made you tons of money, or even more important, saved you from losing a fortune. Now, there are limits to the capacity of the online video sessions, but right now, for a limited time, Dan's offering you the position of charter subscriber, get this, for less than the price of a cup of coffee a day. For all the info or to subscribe, just simply click on themoneyman.com, themoneyman.com.
You're tuned in to the MoneyMan Report with your host, TV and radio money man, Dan Frischberg. For more information about everything we're talking about, go to themoneyman.com right now. That's themoneyman.com.
Welcome back. This is the MoneyMan Report. I'm Dan Frischberg. When the cruise lines start to do better business, it's going to be paid for with MasterCards and Visas. And so instead of worrying about when that happens in which company, you know that at the beginning, the cruise line is going to be offering discounts. And they're going to be giving you balcony suites for the price of a little room. They're not going to be that profitable because they're going to be giving it away. But it's all still going to be paid for, and MasterCard and Visa are still going to get their share of it, whether the cruise company loses money or not. Same thing's going to happen with the airlines. Same thing's going to happen with retail stores. Same thing's going to happen with everybody. So MasterCard is a perfect example of a company that is going to automatically benefit as we have recovery and all different kinds of recovery. Not only that, but they're going to probably add 1 billion customers. They're going to probably add 1 billion customers over the next couple of years as the people in India and China become bankable and actually get their money in a bank and get a debit card. And now they're actually adding on things to make it easier to use. So they're going to reach all of those people. And so the volume of money that's going to pass through MasterCard and Visa over the next several years is going to expand enormously. And it seems like...
And if you're showing MasterCard, we're not seeing it, just to let you know. We're still seeing stock charts. I'm not sure if you had switched it.
Thank you. I wasn't showing you anything. I was just talking about it, but this is the place. So here's MasterCard, and I am going to start to show it to you now. So thank you for telling me. But the stock has gone up and it's now at $363. And that's because that the economy is going to pick up. Now, the government is still trying to make it look like it's going to last forever. For some reason, they want people to still be worried about these diseases. And they're still trying to tell you that even after you get the vaccine, you should worry. I'm going to keep my politics out of this, but I think it's the stupidest thing in the world. But nevertheless, it is eventually going to get to the point where everybody in the world is not worried about COVID anymore, and where they're worried about how much they can consume and how much they can invest. So MasterCard is going to do very well. And here's $363 is where MasterCard is today. If I go out to 2022, about almost just about a year from today, I can look at this for 22, and I can look at it again for 23. As you can see, they don't have anything like the open interest that a company like Microsoft has, because people are not thinking about this, but they will be. So here we are looking at a 30 or 40 delta. And the 40 delta costs about 5% of the price of the stock. One of the questions I'm getting from a lot of people is there a formula? Obviously, I love to get it for 5% or less than 10% of the price of the stock. Sometimes there's a stock that's worth buying, but you're not the first one to think of it. And so it may be 6, 2 or 3 years, but a lot of people may know about it already. And so now it may be that the option, instead of being 1/20th or 1/15th of the price, is getting to be 1/10th and even 1/8 of the price of the stock. Now, the fact is that you're paying more for it. The leverage isn't as good, but on the other hand, you have more certainty that it's happening, and you have more people doing it that's going to make you money maybe faster. So it may be worth it to pay the extra money and pay 1/8 of the price of the stock instead of 1/20th of the price of the stock like we're doing here. That's a judgment call, and my judgment is not always right on it. But I do know that I prefer to pay less if possible. So if I can find MasterCard, which has just as much certainty as Fastly, that they're going to make a lot of money in the future. Fastly, it's happening right now. But Fastly isn't having the same level of growth right now that they were having before. I think they're going to buy a year from now, they will. But right now, what's happening is Fastly is growing because their customers like Hulu and Amazon are automatically growing around the world, but Fastly isn't getting a lot of new customers. They're just getting a lot of new business because more people are on Amazon and more people are on Hulu and Netflix. So that stock, maybe you have to wait 6 months or a year for Fastly. Twilio, on the other hand, is very current, but it's more expensive. But MasterCard may not be as popular because maybe Kathy Wood isn't doing interviews about MasterCard. And so I'm getting this one for 5%. Buying a stock that Kathy Wood likes may not be all bad. Eventually it will be all bad because by the time all the lemmings are buying it, you're going to be paying too much for it, and you're probably not going to be, that's not the team you want to be on. But as Kathy Wood is getting more popular, it may be that some of the things she does may still be worth doing. But you're going to pay a little more for Kathy Wood than you would have a month ago because Kathy Wood is becoming a rock star right now. And now everybody's writing about Kathy Wood. But Kathy Wood's not into MasterCard at the moment, I guess. And so we're getting this option for 5% of the price of the stock. That's good. I like it. So let's just look at how do you make the chart. People are asking, how do you get a chart of the option prices that you can compare to the stock price? Because that's a very good way to see how much action you get out of the option when the stock goes down or up. It helps to choose which option to buy. So I've been demonstrating that, but people want to know how to do it. So I'm going to demonstrate it again. And again, you're going to have it on video. You don't necessarily have to know how to do it right now as I show it to you. But when you receive the video, you can stop the video and duplicate what I'm doing and use it to look at all the companies that you're interested in knowing about. Today, I'm going to compare MasterCard with Kathy Wood's ARKW Internet Fund, which is becoming so current that she's probably going to get it some kind of a Academy Award like the governor of New York gets, probably win an Emmy. But the bottom line is that it's probably not too late to buy stocks that Kathy Wood likes. Someday it may become too late. But here, first of all, MasterCard. This one is at about 5%. So Don, I'm kind of answering you, but by saying there isn't really a set formula, you have to measure. You're paying a little more for something when it becomes more obvious, and sometimes it's worth it to do that. What day does it become not worth it anymore? I'm not sure. But at some point, I can say, I would rather use my money to do something else. I love that stock. I agree with Kathy Woods, it's wonderful, but now everybody's buying it, they're bidding up the price of it, and I can get more leverage with MasterCard, even though I actually like the company that Kathy Wood is buying better. I like the company better, but I'm not going to make as much money on it because too many people that don't make money are buying it. What I showed you at the beginning of this meeting was how the value of an account that is doing this technique, how it increases in value. And so you're talking about 4 or 5 times your money over the course of 3, 4, 5 months. That's pretty good. And so it's worth it to use these techniques. And it's worth it to be conservative, and it's worth it to miss out on something that's questionable. There are good things to buy. There's a company called Curiosity Stream, which is not yet profitable, but the economics of it are fabulous. It's a streaming video company, and so basically they're probably going to correlate in value with Roku, and they're going to benefit as Roku advances and 1 billion people are on Roku. Curiosity Stream is going to grow at the same time. They're producing videos, but they cost almost nothing because Netflix is full of movie stars and they have to pay a fortune. And Curiosity Stream is professors at Stanford or somewhere where they're doing it about history and they're doing it about science. They're very interesting videos. They're growing very rapidly, but they can produce 10 or 20 videos for the cost of one Netflix video. You know, I love doing this radio program. I even love it more now that it's everywhere. It's on Spotify and it's on iTunes and it's on iHeartRadio, iHeart everything. There are so many different ways to access us. And you can watch the video on themoneyman.com as well. It's there for you all the time. You can catch it when we do it live, but you can also catch it anytime, streaming everywhere. So thank you all very much for supporting us all these years, and we won't leave you. We're sticking around.
You've been listening to the sound of your money growing. This has been the Money Man Report with your host, radio and TV money man Dan Frischberg. Hear it again every weekday morning here on Bradenton's WWPR, broadcasting worldwide. It's Better Living Radio.